Recording in progress.
Good evening, student. Myself, Dr. Priyanka Ghosh. Today, we are going to discuss about one problem which are coming under the insurance claim. So here, when we are running different kind of business, sometime there we can see different kind of accident in our business. So in that case, how you can claim the insurance in that case. So what is the procedure for that? So here we are going to talk about what are the accounting procedure we are having. And mainly here we are going to talk about when the fire will be break out in our business and then the stocks will get destroyed. So in that case, what is the accounting procedure? So this is what one problem that I have chosen, and it is the big problem. So let us discuss about the procedure and the calculations. So before going to the calculations, so first let me see what the question is telling. So on 1st April 2002, a fire destroyed the stock of a business, and from the records, what are the details they have got? So we can see that they have given the stock for 2 days. Two dates. First one is 1/1/2001, another one is 1/1/2002. So you can understand 1/1/2001, it is the opening stock, and 1/1/2002 means we can understand this is the next year opening stock, means this year closing stock. So like that way we have to understand. So purchase for the last year, they have given 1,29,250, and for the 3 months up to 31st March 2002. So this is 3 months, means here you can see the date. In this problem, the date is very important. So in this problem, the year ending is 31st December 2000 each and every year. So you can understand the last year, the year ending or year closing, it was 31st December 2001, and from 1st January to 31st March, they have given the data, purchase data, and 1st April the incident happened. So from the next year, from 1st January to the date of incident, they have given all the details. So the 1st January to the date of incident, my purchase was 60,000. Sales last year, it was 1,70,000. And again, the sales from 1st January 2002 to up to the date of the fire, it has given 1 lakh. Manufacturing expenses for the last year, it has given 21,000, and for the this year, the current year, the 3 months we need to calculate. So how to calculate, we will come next. And then in February 2002, the goods valued at cost rupees 500 were distributed as free sample. Free sample means here we are talking about when we are distributing some of the goods as for our advertisement purpose. So that is coming under the free sample. Manufacturing expenses were normally found to be constant, means here we can understand that each and every month the manufacturing expenses are fixed. There is no changes. The salvage stock was estimated at rupees 7,000. Salvage means here we can understand the scrap value of the stock, which has after the incident, the scrap value of the stock will be 7,000. So now we need to calculate how much will be the amount of claim at the end of the day. So when we are going to do the calculation on the fire insurance, we are having some 5 to 6 steps to follow. So what we will do, first we need to prepare the trading account, which will be based on purely on previous year, not on the current year. So why we are preparing first a trading account? To find out the gross profit, and then we have to, based on the gross profit, we can find out the rate of gross profit. After finding out the rate of gross profit, the step 3 will come memorandum trading account. This memorandum trading account, it will be the current year trading account, which will be the 1st January 2002 to the date of the fire. So why we are preparing this memorandum trading account? To get the value of closing stock. So after getting the value of closing stock, our fourth step will be to find out the actual amount of loss. How to find out the actual amount of loss? The date, the closing stock value, what we will get from the last memorandum trading account. From there, we need to minus the scrap value of the stock. If in the question they have given, we should consider it. If they don't given, then the full amount of the closing stock, we can understand the full amount will be the actual loss. After getting the full actual amount of the loss, we can calculate the actual amount of claim. That is our last step. That is the fifth step. So now we will discuss about this problem. So first, so here one thing, please remember, if in the question they have given you the gross profit percentage, then no need to go for step 1 and step 2. Directly we can go for step 3. But if they have not given the gross profit percentage, means we should prepare the step 1 and step 2, then we can go for step 3. So first we will prepare the step 1. So step 1 is the previous year trading account. So trading account, you know, that debit side all the expenses will come and credit side the sales and closing stock will come. So here in the question only the opening stock is given 45,000. So opening stock is 45,000. Purchase for last year 1,29,250, that also we have written. And then manufacturing expenses for the last year 21,000 we have given. So sales for the last year 1,70,000 we have recorded. And then by the closing stock, this is the closing stock. I said this year opening stock means it is the last year closing stock. So last year closing stock was 55,000. Now we need to calculate the gross profit. So how to calculate the gross profit? So here we need to find out the total of credit. Total of credit will come sorry, 1,70,000 plus 55,000, 2,25,000 minus all your debit expenses. So 2,25,000 minus 45,000, 1,29,250 and 21,000. The balance will come the gross profit. So from the step 1, we got the gross profit, that is 29,250. Now what we will do? We will go for the step 2. Step 2 is what? The rate of the gross profit. So in this step, please remember, always we need to calculate the gross profit on our sale. So if you want to find out the rate, the formula will come gross profit divided by sale into 100. So gross profit it was, we have calculated 29,750 and previous year sale was 1,70,000. So when we will calculate, the percentage will come 17.5%. So now the step 1 and step 2 we have done it. Now we will go for the step 3. Step 3 is the memorandum trading account, where we are going to find out the closing stock in balancing figure, because on the date of the incident we don't know how much the value of the closing stock. So the same from the first day of the next year, means 1st January 2002 to the date of the fire, we have to prepare the trading account. That is for the 3 months. So here, this year opening stock they have given, last year closing stock means this year opening stock. So opening stock we have started with 55,000 and the purchase they have given 60,000. So please check into the question. The purchase for 3 months they have given 60,000. Now out of this 60,000, there are some of the goods which we have distributed as the purpose of advertisement. So if you are distributing any goods for the purpose of advertisement, what we need to do? We need to minus it from the purchase and the net amount will come to the trading account. So from 60,000, we have minus 500 rupees and then the 59,500 has come to the trading account. Next, we need to record the manufacturing expenses. So manufacturing expenses for last year 21,000 and they said that the manufacturing expenses is constant. So how to find out for this month? So this year. So this year we are preparing trading account for 3 months. So here you can see the calculation. If manufacturing expenses for 21,000 for 12 months, how much it will come for the 3 months? So here the calculation will come 21,000 into 3 divided by 12. So for 3 months, the manufacturing expenses we got 5,250. Now, as per the question, the sales they have given for up to the fire, it is 1 lakh. So that also we have recorded here 1 lakh. Now, gross profit we need to calculate. Step 2, we have calculated the percentage of gross profit. Now, this percentage directly we will calculate on the sale. So 17.5% on 1 lakh, our gross profit for these 3 months will come 17,500. Now, from the calculation balancing figure, we are going to find out the closing stock. How to find out? So first we will do the total of the debit side. So here 55,000 plus 59,500 plus 5250 plus 17,500. So total will come 1,37,250. So from 1,37,250, I have to minus sell. That is 1 lakh. So balance 37,250 will come the closing stock as a balancing figure. This is the value of closing stock on the date of fire. Now from the step 3 we got the value of closing stock. Now we will go for the step 4, which will be the calculation of actual amount of loss. So here the stock on the date of fire is 37,250. From there we have to minus the scrap value. So here the scrap value in the question they have given 7,000. If they have given, we need to minus it. If they don't give, then the total amount also will be considered as the actual loss. So here 37,250 minus 7,000, our actual loss of stock is 30,250. So we know now, as of now, actual loss we got to know. Now we need to calculate the amount of claim. So in this question, the policy amount is not informed. If the policy amount is informed, we need to follow one formula. The formula is policy amount into actual loss of stock divided by the value of stock on date of fire. But in this case, the actual amount of policy is not given. So in this case, what we will do, whatever the actual loss of stock is there, 30,250, that only will be considered as a actual amount of claim, as the policy amount is not given. If the policy amount is given, then we should go with the formula and then we can calculate the actual amount of claim. Again, I am repeating the amount of claim. If the policy amount is given, the formula will come policy amount into actual loss of stock divided by the value of stock on date of fire. As they have not given the policy amount, directly your actual loss of stock will be equal to the amount of claim. I hope all of you have understood the problem. So next class, we will start with the another problem. Thank you.